The company's stock price does not come cheap, it is still worth buying. Adobe's past performances in the stock market were all exceptional, starting an over-the-year revenue increase of 24% in its 2019 fiscal year, which is higher than Microsoft, the standard of computer and software firms. Also, Adobe easily dominated the market in 2020 through its double-digit revenue growth. For 2021, Adobe has one of the highest gross margins at 86% and brags more than 31% net profit margin. That is an impressive growth right there. If Adobe stocks did not impress you, the value and competence of the agriculture industry by making agricultural produce more easily discoverable, Pinduoduo strengthens its online marketplace platform. This gives way to an increasing number of customers, completely matching the demand and supply ratio. What is interesting about this company is that it grew its revenue from 0 to 3.5 billion within 5 years time frame. That is amazing progress considering that Alibaba, the major and leading e-commerce enterprise in China, took almost a decade to hit its 100 billion GMV mark. Pinduoduo accomplished this progress brilliantly in only its first few years. Number 8. Disney. If you want to build a solid portfolio, you should consider investing in those well-established companies like Disney. Disney's stock price has increased 17% since November last year. Disney has a $255 billion market capitalization, and its revenue from the 2020 fiscal year has closed to 26%. Add those revenues that you'll be getting once the park opens, and your portfolio will be on fire. The experts have already projected Disney's valuation this year with a 159% increase in their earnings, and by 2026, Disney Plus will surpass Netflix. Number 7. JD.com. Formerly called 360 Buy, JD.com, a member of Fortune Global 500, is one of the huge companies playing in the Chinese e-commerce market. It manages roughly around 800 warehouses in China, beating the number of warehouses Amazon has. To ensure that they will be meeting their own delivery timeframe, they created its logistics companies to serve their own distribution needs. In November last year, the company was reported that it's studying a $40 billion valuation for the logistics unit alone with hopes of a $5 billion profit. After that, the company debuted another division of their growing business, JD Health, with its initial public offering at the Hong Kong Exchange. Luck must be on their side. JD.com assets jumped to $3.4 billion after opening their JD Health to the public. Number 6. Mercado Libre. With the rise of e-commerce, Argentina's Mercado Libre is swiftly on the rise. Being the largest, the company leads the flock in e-commerce and digital payments in Latin America. Like Amazon and other e-commerce companies, Mercado Libre is creating a network of service industries in the fields of logistics, financial services, and tech solutions. Known to have an excellent corporate program, Mercado Libre has made the merchants and the customers equally draw each other to the leading e-commerce programs in search of opportunities. So, why buy its stocks? We see 3 reasons that you must consider. 1. The company operates in 18 countries, with Argentina, Brazil, and Mexico as their top market. 2nd, people love shopping on their sites. Their registered active users skyrocketed to 320.6 million in 2019 and are expected to grow more than 60% by the end of 2021. 3rd, the company was able to make a profit of $50 million in just 9 months. Number 5. Facebook. With Facebook's total active users last year, the report says that it continues to hold the record of the largest social media platform today, closing a strong year at 2.8 billion monthly active users. You might wonder why the number of active users matters to Facebook. It is because the bread and butter of the company are the advertisers, and advertisers need to have a bigger platform, a bigger target market, which explains why Facebook needs to do its best to stay as the top-notch social media platform. The more users there will be, the more advertisers Facebook will have, shredding thousands and even millions of dollars for a single ad. This gives Facebook an impressive growth in its revenue and earnings. Facebook ended the year with an estimate of 30 to 35%, while its earnings per share increased to $3.88, which is roughly 50% from the previous year. Add the Oculus Quest 2 VR headset, which has a total of 156% increase on their revenue. Facebook is definitely a good catch to your portfolio. Number 4. Apple. With its $229 billion in revenue last year, you will really need to consider buying Apple stocks. Although Android seems to be the biggest player in the tech world today, Apple's App Store gains were reportedly twice as much as Google's Google Play, which serves as a lead and an indicator that Apple's users are growing. The firm is actually planning to make a stock split to drop the price of each share. The stock split resulted in its market cap surpassing $2 trillion. That continuously climbed up to $2.16 trillion, and its revenue growth in the first quarter of 2021 skyrocketed to 21% from 2018's 16%, making Apple one of the most prized stock in the market. Number 3. Alphabet. Alphabet Inc. is an American global company formed through the reorganization of Google on October 2, 2015. With Google as one of its main revenue drivers, 85% of the revenue of Google's parent company is derived from advertising. This is what investors should consider before investing in Alphabet, since this is the bread and butter of the company. In fact, the company closed its 2020 fiscal year with $56.9 billion in revenue and $22.30 per share. Apart from this, the company is trying its best to solidify its status as the perfect go-to program for advertisers, buyers, and sellers through capitalizing on projects outside its comfort zone, investing in broadening its product lineup from YouTube, cars, to artificial intelligence and voice search. With its control of 92% global market share, Alphabet's income growth is at 17%. That is 6% higher than Apple's. Number 2. Amazon. This online bookseller platform that turned out to be a $1.6 trillion worth global retail store has made it again in the stock market, reaping a 7% growth on its stock price and ending the year with almost 70% earnings per share. Although reports said that Jeff Bezos, the founder and CEO of Amazon, will step down this year, the company has still managed to bring in $51 billion from its web services. In fact, last year's stock increased to 5.5% over March 31st. Amazon's stability was strengthened by the pandemic too. Because of the virus and the protocols, many people are considering shopping online for food and other household supplies. Another thing to consider is Amazon Prime memberships development, which gives the company a lot of room to increase its revenue and earnings. Apart from this, the company's expanding businesses from their revenue-driven advertising to the private label things they are trading. Indeed, there are plenty of reasons why you should buy Amazon stocks. Number 1. Tesla. Tesla, with its products and projects, has made it to our top list. With a market capitalization of almost $1 trillion, Tesla turns out to be the leading car manufacturer around the world. The company's total returns last year grew to 46% more, and their earnings per share increased to 118%. This gives the investors a smooth ride in Tesla stocks as the business meets its quarterly target. In fact, Tesla's total revenue last year was $31.5 billion. If this trend will continue over time, then investing in Tesla stocks is definitely a good call. Also, please do not forget, Tesla's revenue does not come from its electric car alone. They have products for energy, storage, and solar powers too. That is the top investors, today's video. Please give us a thumbs up if you learned something from this video and hit that subscribe and notification button below so that you will get the latest updates that will help you increase your money and attain your financial freedom. Also, if you have topics that you would like us to cover, please do not hesitate to post them in the comment section below and we will surely check them out. See you at the next one.